Hello, it's Mr. Intermarket Analysis bringing you a review of the DAX for Thursday 21st of November 2013 trading. Okay, so what's happening here, chaps? Okay, so basically the fundamental current behind the DAX right now is the fact that obviously this negative deposit rate at the ECB. Okay, that's going to propel the DAX higher. Why? Because Euro's been absolutely clobbered, which in turn helps the exports, and it should keep DAX afloat. Okay, so on this occasion here, everybody's talking about a sell-off there. Okay, tonight towards the end, but in reality, all I can see in the DAX is it certainly wants to go higher. You can certainly argue, yeah, we have an unfilled gap at 9050, which I'll touch upon and explain to you how that may well be hit. And there's always a possibility, and there's always two ways to each trade. Okay, so I'm neither a bull nor a bear. I'm just a day trader. I don't really care. I don't care if it hits gap fill here. I don't care if it goes higher. I honestly couldn't care less. My job as a day trader is just to nail points, and that's what I do in the live analysis service. Now, I encourage everybody, if you are interested in learning how to trade in real time, okay, and if you want to say supplement your current analysis, understanding, improve your technical analysis, improve your fundamental analysis, etc., etc., then come and join me on the Analysis.com website, Analysis.com. I have a live analysis service which I've got I explain how I run it. Basically, I send out text messages, I send out emails, and I try and give commentary as well whilst the market's going. Okay, and I share obviously my analysis and trades as well via email, explaining the reasons why I've taken the trade. Okay, and hopefully if I keep doing that with an individual, then they eventually become independent themselves, learn to think independently themselves, learn to judge the market themselves, and become successful traders independently themselves. So the whole aim is to help you to learn how to fish, so you eventually go solo. That's the aim. Okay, so basically I'm not interested in keeping subscribers. I love for them to come, learn 6 months to 12 months, and then disappear. Okay, and enjoy the sun, travel around the world, and just enjoy yourself. Okay. So basically that's the thesis. So there's a free trial there. If you want the free trial, all I need is your email address and a mobile number, and I'll add you to the text messaging database. If you email daytrader@inter-market-analysis.com, and I'll certainly get you added on there. Okay, let's get back to trading now. Okay, so analyzing the markets again. Yes, okay, so we've got an expanding wedge pattern here, rising, expanding, or shall we say rising, expanding wedge. So technically speaking, that is relatively bearish. Bear that in mind. That's just a formation. Historically speaking, a rising expanding wedge isn't exactly a bullish sign. Okay, so on this occasion, just keep an eye out for that obviously possibility. But given the fact that the fundamental current is so strong, a cheaper euro, or a euro getting hammered, is going to increase in exports, etc., and propel the DAX higher. Very hard to see any other outcome other than higher at the moment. Okay, yes, I agree, we do have gap fill below, but given the fact that the US market's already at support, it's very hard for us to justify a further move down on the DAX unless we get some very bearish data, correlation talks, etc., etc. There's always the wild card. Okay, so there's always that exogenous variable event that can shake the market. Okay, obviously we did have the market sell off quite substantially in the evening given the post FOMC minutes, etc. And exactly, we'll see exactly how that pans out. Given the fact that the Asian markets have been quite bullish as of late, even last night when the US market sold off, the Asian markets held their own and held a flat line. Okay, so we'll see exactly how they react tonight, and then I'll just basically react accordingly. I don't really care. Like I said, I'm not a bull or a bear. I'm just an individual. I'm just a day trader. I can switch my bias at the dime. Okay, so let's have a look at the small and micro time frame now. Okay, so 60-minute chart, we have a H&S formation. The upper level is 9260, 9250. Neckline is 9150. If you project on the downside, 9050, which is gap fill. So technically it makes sense. Okay, technically it makes sense, but we need a catalyst. Given the fact that we've got this negative deposit rate in the background, which is going to obviously keep the euro at bay, and obviously the DAX, or should I say the German exports, will obviously remain buoyant, and the German economy will continue to grow. Okay, so given the fact that's the case now, that's certainly a catalyst for Europe to go higher. This is why this, technically speaking, I mean, you can certainly argue that this H&S was negated at one point, although it's a topping tail, so we didn't get a confirmation above. So it just depends which camp you want to be in. Okay, now at this very moment in time, for H&S to play out here and close the gap below, it's going to be very hard given the fact that we've got this negative deposit rate in the background. Okay, unless the ECB comes out and does a full U-turn, find it very hard, especially given the fact that there's a currency war going on between the ECB and the BO and obviously the FOMC. Okay, so we'll see, the Central Bank of America. So we'll see exactly what happens there. Okay, but from our perspective, again, we just take each trade as it comes. If we do hold below, my only concern with regards to this HNS is that the market did actually retrace more than the 75% on the wick. Okay, it hit almost a double top. So you can class it as a double top if you want, but from my perspective, it's definitely a HNS, and there's a high probability that this will break and move higher, and potentially create another short squeeze, given the fact that the Yanks love to do that as well. Okay, now let's have a look at the 10-minute chart. Okay, 10-minute chart is slightly tricky. Okay, given the fact that we've got this rising trend line support here. One can certainly argue, and this is a very valid argument, the fact that we've got this HNS formation now, given the fact that we've had this bear flag formation. Obviously we move lower, so keep an eye on that. So 9240, I can explain 9240 to 9180. That's something, 9240 to 9180. That's obviously 60 points on the downside, so that gives me a 9120 on the downside. So keep an eye on 9120, which is around here. That's certainly a possibility tomorrow. Okay, so that's certainly a possibility tomorrow. We'll see exactly how that pans out, but 9120 should be solid support if we do obviously go lower. Okay, just drawing my levels. There's a level over here which is a support level. That level coincides around 9130 level. So again, that should certainly be a level to watch out for. Obviously we've closed the gap here. Okay, so again, on the upside there's no gaps now to track the DAX higher, so that's a cause for concern if you are a bull, which I am. Okay, I'm certainly swing long on the DAX at present, so that's certainly a cause for concern. From my perspective, fundamentals definitely trump technicals at this very moment in time, especially given the fact that you have central bank intervention. Then generally speaking, the fundamentals will take over and technicals can take a back seat, especially when central banks come in. Obviously if it was anything else, obviously any other variable, then I'd certainly be in the bearish camp right now. But it's very hard to fight central banks. Okay, so I think that'll wrap it up there, folks. Okay, so risk on, risk off, wax on, wax off. Goodbye now.